Hi everyone, today we're talking about Dropbox stock, which is a stock that I have been really wanting to look into since the IPO, especially because a lot of time has passed since its IPO. It's a stock that I want to check out because it's a product that I use and I really like, and I thought this company must be doing quite decent numbers. So it was about time that I go and check Dropbox out and see if it's a buy. And I also noticed beforehand that it was on a little bit of a discount as well, which also makes it a little bit interesting for me, and because I like buying a lot of stocks that are at a discount and a little bit cheaper, I always like getting into them stocks. Now, what I would first do is I'll go have a look at the stock chart and see what's going on with the stock. So we can see that the stock actually IPO'd at the price of $21. It did reach an all-time high of $26, and it's now trading around about the $18 range. So it has fallen quite a bit since its IPO, and it's mostly dropped from its earnings report. And it was down on its earnings report because of slowing revenue. It was previously doing 19% revenue, and I think that's going to now drop to about 15% revenue. And that's kind of what caused the kind of fear that a lot of competition is really starting to affect Dropbox, and that's really why the stock's gone down. It kind of spooked investors and kind of made a few people worried about the future of Dropbox. Now, I've kind of got some good points and some bad points with Dropbox, and then at the end of the video, I'll talk about what I'm going to do with Dropbox if I'm going to go buy Dropbox. And the first thing I wanted to check out is, because this stock is making profit, just going to go see what the P is. And there was a forward P of 30, which isn't too bad. It's not crazy high. At the same time, I wouldn't mind it to probably be in the 20 range. That would have really a forward P of 20 would have made me quite happy, because it is a growth company. But a 4p of 20 seems pretty cheap on a growth company like this. So it wasn't the worst P ever, but at the same time, it wasn't attractive P. Now I'm going to go with the good points first, and the good point is that it's still going to be growing at 15% revenue, which is fantastic. That, a double-digit growth is kind of what I like to invest in, and 15% revenue growth is pretty good. Obviously, the revenue is dropping, which is the giant worry with Dropbox, and is the competition starting to affect that revenue? At the same time, I also think that they might have been sandbagging these numbers a little bit. So it seems like they might be able to grow more towards the 16-17% revenue, which wouldn't be too bad a decline, especially how much it's grown previously as well. Dropbox, the first thing that really appeals to me about Dropbox stocks is that I actually know the product, so I kind of have a good idea how it all works. Like, normally when I invest into a company, sometimes I have to know what this company is doing, or what product this is for the company, or what this product does. Sometimes I have no idea what the products are, so I have to get some decent knowledge and the competition of what's going on with Dropbox. But I like the product. I know, the competitors. I know the challenges that Dropbox has in the sector. But I use Dropbox quite often, so I know the product and how it works and how the plans all work. And for me, the product's fantastic. So the first thing I want to know as an investor, how good is this product that they're trying to sell? And when you check it out, there's the free account version, which is really good, and they try and rely on converting a lot of the free accounts, which I think on the last quarter grew by 400,000. They try and convert them into actual paying customers on subscription basis, and I think about 3% at the current conversion ratio from paid to or free accounts that go to paid accounts, and then try and push a lot more expensive versions or accounts or subscriptions to the people that are already paying. And the product's fantastic, so I can't complain at all with the products and how it works. Another good thing is the improved profit margins. So the profit margins are doing quite well, and in the next financial year, it looks like the profit margins are going to carry on increasing for Dropbox, which would be really good. I always think margins is it's not the biggest thing in the world, because from time to time they go back. You can have currency changes, and that kind of affect the stock. So kind of little things like that, are not the biggest thing when looking into a stock for me. But if it's going to improve slightly, then I do take it into account. But like I say, the previous things I've said are more important in my opinion. And also, what really attracts me to Dropbox is that it is a company that is IPO'd and it's making profit. There's not many companies now that are growing at this kind of percentage. They go IPO and then they are pretty much 2 to 3 years off kind of, where they're going to be making profit. Whereas with Dropbox here, we have a company that's making profit and is going to carry on improving that profit going forward. And as well as that, it does have a very good balance sheet. One of the big things with when stocks IPO, a lot of them have a terrible amount of balance sheet because they don't make money, they don't make profit, they have a lot of debt because of that, and then they have to go sell some more stock to kind of pay for get the money in, and then the stock goes down and there's all the negativity around the stock, and if there's a recession, is this stock going to be around still? We don't have that problem with Dropbox because Dropbox has a really good balance sheet. The cash on hand is something about 1 billion, I think it is, which is a lot, especially when the company is only making like 400 million. That is a lot of cash for the company to cover all the kind of debts that it may have going forward. And also having 1 billion cash on your balance sheet, I haven't put this down, but it kind of makes it a bit tempting for for a big company, a big cloud giant to go, we'll go pick Dropbox up and buy them out, because it's a great company with some great products, and it also has a little bit of cash on its balance sheet with no debts. That might also tempt them in a little bit as well. So a good point on this is that it potentially would make sense for a big cloud giant to go buy Dropbox out. So there's some bad points with Dropbox, and I'll go through these now. The revenue is slowing down, and that's the big concern why the stock has gone down recently. Obviously 15% is still not a bad revenue growth. Obviously it's dropped from 19, and previously before that as well, it had dropped from 20 something percent, I think it's 23%, and it's dropped down to 19, now 15. So people saying, is this kind of like now worrying that Dropbox is carrying on this trend of dropping down? Obviously it is slightly worrying, and it's probably, in my opinion, the biggest negative with this stock is the revenue slowdown. Another negative is the competition, and there is some giant players in this sector, and it does worry you when you see like Dropbox is going against a company like Microsoft, and it's like, that's going to be quite painful for Dropbox, because Dropbox is relying on, as well as having the revenue slowdown, the big problem with Dropbox is that it only has its one product, its one service. It has a very small moat. Microsoft, that are in this area, big company, well-known company. As well as that, when you invest in Microsoft and you get into the cloud sector, you're getting all the other sectors with it. Dropbox only has that one revenue stream. It only relies on its cloud business. So obviously it has a very small moat, and it has a lot of competition with some really big names. So that's also something quite worrying that could really affect Dropbox going forward. And obviously, that might be what is also causing some slight revenue slowdown going forward. And I have put down there that it has a small moat, but I did, briefly talk about that. When we look at the competition and compare the other people that are in this area, the other giant companies, and their moats are massive, and they're kind of relying on that one revenue stream. And I've said previously before, I like to get into companies that have a big moat, have a big revenue, different variety of revenue stream, because if one gets affected, at least the other ones are going to be covered by it. And like you say, like Ulster, for example, a stock that I invested in, vaping hit a problem, but the stock's okay, the company's okay, because it has all its other revenue streams covering it. So obviously that's a big problem with the stock, but at the same time, that's probably why the stock's only valued at $18, is because it's not doing massive amount of money, and it also has one revenue stream really. So my kind of overall opinion with Dropbox is that I do like it. I do like cloud companies. I think it's a sector that's growing huge. I am slightly worried that I do already have shares in Microsoft, and it's a little bit conflict of interest that if I went to go buy Dropbox. So that's kind of like one negative that I have with the company. The second one obviously is that I'm not too bothered about the revenue slowdown. For me, it's more that it has that one income stream, and if Microsoft or Google go dominate the area, it will cause problems for Dropbox because of only having that one income stream. At the same time, does it then make sense for Google or Microsoft to go buy Dropbox? I think for Google, this would be a great purchase for them to go buy Dropbox, in my opinion. So that would make sense to me, but obviously I can't invest in a stock completely based on that, I think it might get bought out, but I think it would make sense for them to buy it at the same. So just back to my original point is that obviously there's a lot of competition in there that kind of does worry me. But apart from that, I see a lot of positives with the stock. And if you can carry on, fighting away against these big giants and, carry on growing at these kind of rates, then the stock is going to eventually go up in price because the EPS is going to grow, the revenue is going to grow. The product is great. Let's not forget the product is great. The margins are proving, and also the good thing about this growth stock is that there's no debt on the balance sheet. I've kind of got a few risky stocks at the moment. I've got Uber, I've got Tesla, I've got Aurora Cannabis, which are all companies that are pretty much not making money or close-ish to making money, and they're quite risky. When you look at Dropbox at the moment, the company is actually quite healthy. The only problem with it is that it's just got a lot of competition in this sector. So I've kind of got to weigh it against the whole point of how much upside do I see in this stock, and is it a conflict of interest with Microsoft for myself? And I don't mind getting in this stock because I have Microsoft. I don't mind having, I definitely wouldn't make Dropbox a massive position in my portfolio. But when I look at what this company has to offer, I do see a lot of upside in this company, and I probably see, at the moment, I see about a 40% upside in this company, which isn't too bad really. So I'm kind of going to monitor this one, and I might buy it at some point. It might be one of those where at the end of the year, I kind of review what price it's at and maybe sell some shares to buy this one. I'm not 100% sure. Maybe if there was a 10% discount and then it kind of goes, now there's a 50% upside in this stock, maybe that will be what shoves me off over the line. But I am quite tempted to buy this stock, I'm not going to lie. So it's a stock that I'm going to be thinking about over the next kind of couple of weeks, and I am going to be monitoring this stock, and it is tempting me to buy. So if I do buy in it, I will make a video about it. I won't blame you for getting into this stock because when you look at it, it does seem like quite a good risk to reward going on a nice discount as well. So like I say, if I do buy some shares, guys, I will make a video about it and I will update you. For now, but at the moment, I'm not buying any, but I am tempted. And like I say, I will make a video if I do. But that's me talking about Dropbox today, guys. So I hope you appreciate that video. If you were interested in Dropbox, if you could give the video a like, that'd be amazing. Subscribe if you haven't. I'll see you in the next video.